Good morning, everyone.
Hey, Audrey.
Good morning, Rob Chrisman. How are you today?
If I'm in New York or Kansas City or Dallas, it's good afternoon.
That is correct. However, both of us are in the morning time zone. Therefore, here we are. But good afternoon to everybody else in the rest of the country. Thank you, Rob, for reminding me that the world does not just exist on the West Coast. So
Flat
appreciate it.
Earthers unite.
What?
Flat Earthers unite.
Is that still a thing?
I don't know.
There he is. Mr. Casey, nice you could join us.
So,
Good morning, everyone. Thank you for being here today. We so appreciate you being part of our Tuesday update. So a few little things. Let's start with NMLS, shall we? So there is a live NMLS class on Friday that is being taught by yours truly and his truly.
Oh, Rob's going to teach it?
Where is it going to be, Kevin?
It's going to be at the Lake Merced Golf Course in Daly City. Now, that golf course is not at Lake Merced.
Okay.
It's off of 280 in Daly City. But just,
okay, we don't care. So just if they're, how do they sign up for it?
they should be able to go to San Francisco Peninsula Camp, find it. I will also make sure it's on the, where else can they find it?
I told him to get a link to post in the chat, but apparently that didn't happen.
I had a link just to get onto the show. That was a trick.
Oh my God.
Thank you, Rob, for that one.
It's almost like you've never done it before. Wait, are you kidding? What? You didn't use the link I sent you 3 times?
I sent it, Audrey, just back off. I sent it to Kevin. It worked. We're all good.
Just fine.
But for the rest of the people around the nation, they probably don't care so much about this NMLS class.
Yeah.
I know, but if you're in San Francisco and you want to go live, that's where you can do it. So you're welcome.
Apparently my Outlook is blocking you, Audrey. I think that's what it is. Apparently they think you're spamming me.
I should be so lucky for that.
Yeah.
I would, but that's all right. So Audrey, what else is going on in the news that you might want to talk about?
For the people who don't know that we're friends, they might think that you had an issue with me. So first of all, I want to talk about jobs, because obviously there's a lot of job losses in our industry specifically recently. And I was told that for one job, somebody received 600 resumes, 600, and that they didn't even look at them because there were too many. And that really the way to get a job these days is through personal interaction. So make sure, guys, if you know somebody who's looking for a job, or if you hear of a job, make sure that you're connecting people personally, because apparently that's the way to go. Oh my God.
So I wore this shirt. In honor of a lot of news that's going on out there, and job losses. And when you think Countrywide, Dirk bought it from his garage sale.
Yeah.
So the thing to keep in mind in this market is we are in a cyclical business.
Yep.
The people rise from the ashes. Companies can rise from the ashes, and good people are still good people, and bad people are still bad people. But
yeah.
I think having Countrywide, well, actually, let's even go farther back. Let's go back to some of the subprime companies that existed. Ames, Household, Beneficial. Some very, very talented people came out of those companies. Some very talented people came out of Countrywide. And so I'm sure that I know for a fact that we will be hearing about a very large change coming up here in the next hour or two. And brokers need to be aware, not to put all their pipeline with one wholesale investor, but 2, that good people hopefully will find jobs. And so I wore my Countrywide shirt in honor of people who, I won't say went down with the ship, but this business, if you go back, Audrey and Kevin, to let's say 2008 or 2005,
Please don't make me go back.
Who were the top lenders then?
Yeah.
You know, many of them are not around.
Right.
Mm-mm.
Home Savings or Countrywide, whoever. Or some of them have dramatically scaled back their efforts. And so the big lenders, the big investors that we saw as recently as a year or two ago, they may or may not be around in a year or two or three. So things change, but people in general, if you're good at what you do and you are connected, this is circling back to your point, Audrey, resumes are important, but resumes are only part of the story. And so much of this business, as I travel around the nation, I've been doing a fair amount of traveling in June, July, and August. It is a personal, it is a who you know kind of business. And I think it's very important for people to remember that.
You know,
It
going
is.
back to Countrywide, I still think of my Countrywide team, and you know, there was 3 people on that team, and they are all still in the business.
Yeah.
So,
They're great people. They're great.
yeah,
You know, honestly, since we're talking about Countrywide, let's talk about what Angelo Mazzello and Countrywide did for technology in the mortgage business. I mean, I used to have clients that would come to me and go, I love their online platform. I want to keep my servicing with them, even though I'm refinancing. Can you make sure my loan goes back to them so I can have them for servicing? So again, you know, I think that people get swept with a, you know, broad brush, and we have to be careful of that. And with that, I see a lot on social media of people bashing other companies and other people and making fun of companies that may not be, you know, they're hoping they don't do well. None of that is good for our industry or our business. And so my suggestion, as always, is stay focused on the positive. Who can you help? What can you do to be an asset? What are you doing with your extra time right now, since you don't have 455,000 loans in the pipeline? What are you doing to make yourself better? And don't be part of all that negativity. It's just so counterproductive and bad for our industry. Why are you laughing, Kevin? What?
oh, just comment. Someone told me about the comments in the industry about something swinging. I won't go into what was swinging. So,
Good Lord. Okay, that could be a myriad of things. So going back to, you know, again, let's hope for the best, help people through the worst. And at the end of the day, you know, hopefully the right people are left standing, and that the people who are displaced find places to go. So yeah, today's a big day. We're hearing some rumblings about things that are coming down the pike, and it's just not, it's not pretty. So let's focus on something else, shall we?
Well, that's why,
Or not?
I think I may have mentioned this before, Kevin and Audrey, that I've not been an originator. I may play one on TV, but I'm not an originator. And, you know, I've got that little job site, www.lendernews.com, where people can post their resumes for free. And traffic there is really picked up. Employers can look at it for $75. They can view as many resumes for as long as they want, pretty much. And so I'm trying to do what I can to help people get jobs. But the feeling out there is that it is pretty somber. Things are going to continue. It's not like the news that I expect here in the next hour or two is going to be the last that we hear about these things. And you know, the industry will still do a couple $1 trillion of mortgages supposedly this year.
Right.
Still a pretty good year. Might even be the 3rd or 4th or 5th best ever. It's good to keep that in perspective.
mm-hmm.
Well, and again, with all these numbers as they're coming out, they love those headlines. We talk about this a lot. And if you dive into the actual data, the headline and the actual information that's in there are completely different. And so, you know, these horrible foreclosure headlines, yeah, they're comparing it to a year ago when we had a foreclosure moratorium. So again, make sure you're going back pre-pandemic when you're looking at comparisons, so that you're getting a real accurate picture of what is really happening.
Right. So 2 things, Audrey and Kevin. We're going to have a special guest join us later in the show.
Woo-hoo. And
I'm going to try my best, Audrey, not to scowl for the rest of our time together.
Wow. Okay, so just so people know that I coach Rob that when he comes on here, he needs to practice smiling in a mirror prior to getting here. so that he doesn't look like he just lost his best friend. And just to be clear, the special guest has 2 legs, not 4, which, you never know with Rob. So, so we'll look forward to that. Hey, Rob, did you know Steve Schnall with Quantic, the CEO who died last week?
I'm supposed to be smiling, Audrey, and you're bringing up another an untimely. I did not, but I posted that little note in there, and I received several comments from people who did know him and thought very, very highly of him. And I posted 3 obituaries lately, and I guess maybe it's just a sign of the times, unfortunately, but Steve was one of them. Another was the CFO of United Wholesale, a guy named Tim Forrester, who I knew. And then the third was a fellow from Georgia who I'd met several times at Georgia events, who in a freak accident, he was 58 years old, in a freak accident, went out to walk his dog. It had been raining. He slipped on the pavement, hit his head on the curb, dead.
Oh,
And so life is short, and I want to spend my life on shows like this.
that's right. Well, and we want you to be here with us. So thank you so much. The only reason I mentioned him is because, and I didn't know him, was because I have had people reach out to me and say he was really a great guy, and what they did for the mortgage industry was remarkable. And so just wanted to make sure we took a moment and, just had and he was young, 55, and he died in a motorcycle accident. So
yeah, I will. I at some point, Kevin, Audrey, I will perish.
No.
Myrtle will be eating my carcass at some point, and it'll be, who is that? I haven't gotten the commentary for a few days. Did I drop off the list?
Right.
Whatever happened with that?
That's right. That's right. Well, yeah. So I just never mind. I was gonna say I just finished watching the documentary on the FLDS church and Warren Jeffs, and how they had told them that the prophet would live forever. And I always think of you as living forever, Rob. So I hope that the same thing doesn't happen to you that happened to the leader of that.
What happened to that? We're going way off. I feel we're supposed to be talking about Fannie Mae and Freddie Mac. And
yeah, let's go back to that, shall we? Okay, so I find it interesting because well, let's just start with tomorrow. We have a huge news day. So the market's off slightly today. It was good yesterday, but all bets are off because tomorrow we have CPI and a 10-year note auction, right? So that will be the market mover. Any thoughts on how that's going to turn out, Rob? And that will lead us right into my next topic, which can't wait to hear what you say about this. Go. CPI?
So the consumer price index.
Thank you.
Some economic news, believe it or not, because some people and institutions view me as trustworthy. Some financial news I receive in advance. I do not receive the consumer price index or the producer.
I thought you had input onto it.
What's that?
I thought you had some input as to what the number is going to be.
What have I bought lately?
Aren't you one of the people they call and ask about their opinion on rents and such? That's how they come up with part of the number.
No, I've never, don't get me started on surveys. I'll go to, the gas station, and then by the time I get home, somehow there's an email in my inbox asking, how was your experience at the pump? Too many surveys out there.
Yeah.
But a little too many, yes.
Okay, so there was the Fannie Mae home purchase survey. There's the National Federation of Independent Business, the NFIB survey that came in. I mean, there are all these
quiz after this, Rob, just so you know.
Yeah, so
how they
Audrey,
put them together is crazy. So go, yeah.
I know you look like you're 35, but I also know you have grandchildren in their 50s. But you may remember the police song. There was a police song, Too Much Information Running Through My Brain, Too Much Information.
Yes.
Remember that?
Yes.
There's almost too much in the way of statistics and numbers out there. The basic premise or the basic thinking is, when I go to a restaurant, how much does it cost to get a couple cheese enchiladas? When I go to the filling station, how much does it cost to fill up my tank? Is the price of, I use diesel in my car. Is the price of diesel coming down? Is the price of food coming down? Electricity and so forth. It seems to have moderated.
Right.
So if I had to guess, if I had to gamble and pick up or down, I'd say that inflation seems to be moderating. However, I still look, and I've heard that airline tickets are coming down a little bit. And so it seems like some of the pressure is off some consumer goods out there. But, you know, it's job one. It's obviously inflation is so important. Employment is so important. The employment numbers that we got on Friday were so we're in a recession. You know, they were very, very strong.
Right.
50-year high.
Let's talk about
percentages.
that, shall
What's
we?
that?
So yes, at face value, they were strong, right? But if you take a little dive into those numbers and how they're counting, they weren't as strong. How do you feel about that?
So Audrey, every number that comes out, there's going to be somebody in the myriad of news stations, the myriad of economic slice and dice and data. There's always going to be something somewhere that somebody's going to say, oh, but, you know, look at employment in the Southeast. You know, the employment was not strong there. And so that's an indicator of something. You look at non-farm payroll, you look at the unemployment rate, you look at hourly earnings. You go down the street in Main Street, you look at the help wanted signs.
Everywhere.
It's the employment market. You cannot argue. You cannot say, oh, there's weakness in employment. You just can't. And so the question is, our economy is made up of housing and it's made up of jobs. Right now, jobs are firing on all cylinders. The question is, to your point, we get consumer price index on Wednesday. We get producer price index on Thursday. What do those numbers show? If they show even the slightest, I'm going to throw this back at you, Audrey, since you put me on the defensive and you got me all fired up here.
Not
right?
smiling right now, are you?
What's that?
You're not smiling right now, are you?
I'm smiling on the inside. Where was I on my rant?
Yes.
If I were to say to you, Audrey, the consumer price index number tomorrow is going to show consumer prices dropping. You knew that ahead of time. Consumer prices are dropping. What do you think interest rates are going to do?
If they drop, well, I mean, in theory, it should be a good sign for bonds if inflation is moderating or going down. So they should get better. But what's the but, Rob? What is the but, Rob? That's a great question.
That is a joke about a game show, which I'll tell you sometime.
Oh my God, I know that one. And we are
Anyway.
not saying it here. We are not. Don't even go there.
I already did. So what I'm trying to point out is that sometimes, even if you were to know the economic news,
Yeah.
the market will behave differently because the market sometimes thinks in a convoluted way. So interest rates are where they are, thinking that the Fed will continue to raise short-term rates. Interest rates are where they are, given the inflation picture and given the supply and demand of our fixed income securities. So interest rates are where they are. The thinking is that the Fed will continue to raise rates because the job market is on fire. Inflation still needs to be stomped down. And so the Fed is going to continue to do what they're going to do. Long-term rates, though, they aren't quite going along with the game here. Yes, they went up a little bit on Friday, but they aren't going up too much. And so the thinking is that the Fed will continue to do what it's going to do. It's going to put a damper on the economy because it's trying to dampen down inflation. And that's going to, whether it creates a hard landing for the economy or a soft landing for the economy, that remains to be seen. So the inflation number that comes out tomorrow at 5:30 West Coast time, 8:30 East Coast time, that'll be a number that analysts look at. And if inflation is still out of control, that will enforce the view that the Fed will keep raising rates, maybe another 3/4 of a point here in the next meeting. If inflation is less than expected, if inflation is slowing down, suddenly people are going to say, oh my gosh, the Fed's moves have already had an impact. maybe the Fed is not going to raise rates 3/4 of a point at their next meeting. So maybe the economy is already slowing down and the Fed won't have to do this, in which case, heck, bond prices might go down, interest rates might go up because the Fed, because of what the thinking that the Fed, what it might do. So I couldn't really say, I was kind of putting you on the spot. And there's Jason coming in saying nothing's going to happen. I think that would be nice from a capital markets perspective. We don't need the volatility. From a loan officer's perspective and a broker's perspective, we don't need rates to go way up or way down. You know, steady as she goes. I think people would be happy if rates, or I shouldn't say happy, but it would be a nice environment if rates, you know, aside from going up and down a little bit, rates were here at the end of the year. And
Yeah.
that would be an interesting discussion, Audrey, if you want to put that on your calendar.
It is a lot easier to work with stable rates than when rates are bouncing like they
Well, I
are.
mean, that was definitely.
Yeah. And then to address CPI, so it's my understanding how it's calculated. They're going to, come out with a number for the month, and then they're going to drop off the previous month from a year ago. But a year ago, for August, September, and October, CPI was 0.03%. So it was way below. So that number coming off, if it comes in around 0.7 now, then that means a 7% inflation rate thereabouts. And at a steady part and dropping off the 0.3 is going to make it look like inflation's in the 8s and 9s. So I suspect inflation is going to come out even higher, even though no matter what the Fed has done, just the fact that the old numbers are coming off is going to look like we're still in an accelerating inflation rate, even if we're not.
Very good. That's a great point, Kevin. That's a very, very good point. I have a question for the two of you.
Mm-hmm.
I'm going to turn the tables here a little bit.
You go, sir.
Rip up the script. You guys are in the trenches with borrowers, dealing with rate sheets, dealing with borrowers, dealing with whatever. I'm continuing to hear that the quote easy deals are over with. The deals now are hard. It's hard to verify some of these income levels. It's hard to verify this, that, and the other thing. Is that true? And if so, why?
Well, I think that the real reason is because lenders are adjusting to what they're able to sell on the secondary market, and they are changing the guidelines, the LTV requirements, that all the requirements are constantly changing. So it's like pinning Jello to the wall. So just because you did it last week doesn't mean you can do it this week. You have to call, double check, and then pray that remains the same. And that leads us to something we were talking about earlier, Rob, before the show, which is we've been saying for months, do not chase the lowest rate. Make sure that you're looking at which lender you're sending the loans to and how stable they are. What is their ability to sell those loans on the secondary market? Because that, we think, is the issue, is they're not able to sell these loans. And so the guidelines are changing constantly. And that's the hardest part. Would you agree, Kevin?
You took the words right out of my mouth. We were talking about this earlier, that I had a conversation with one of the major non-QM lenders last week, and he was telling me how their products are selling, and they're kind of surprised that they're still selling. But he was happy that they're selling because he was really worried that they weren't, the secondary market wasn't going to be buying all these non-QM products. But he was very clear that as long as the loan to values are strong, there's a market for them. But if you have the older stuff that was done, a few months ago, where it was high loan to values, there's just no market for it right now.
Yeah. There are chats going on about companies buying the market or exiting the market. There's always going to be competition out there. United Wholesale, and I would think the big news that's going to come out is not having to do with United Wholesale directly, but United Wholesale would like nothing more than have its competitors leave, right? And I think it'll be interesting to see what Matt Ishbia might have to say today. But that aside, when you look at some of these guidelines and some of these programs, which was what I was trying to get at, is these 2 or 3 months ago, everybody was talking about intermediate arms. Oh my gosh, we're getting crushed. The credit unions are going to drive all the independent mortgage banks and brokers out of business. The banks are going to drive us all out of business. They're offering intermediate arm rates in the 3s and 4s, and we're in the high 5s for product. And woe is me. We're going to, of course, that has subsided, of course, because the yield curve is inverted. And so the rates on those intermediate arms is not quite as good as they were relative to 30-year fixed. But also it's important for people on the call to remember that, and I made this point in my commentary a couple of times, if you are a bank, I look at what I'm earning on my savings account, which is 0.05% or some minuscule amount. If I'm a bank or a credit union and I can take Audrey's money and Kevin's money and Rob's money, Audrey's good for $500,000 in her savings account. Kevin, you're good for $500,000. Rob, you've got $80 in your savings account. And I can take that $1,080 and loan it out at an intermediate arm rate of 3 or 4, maybe even 5%. Think of that spread that credit union earns, paying 0 or 0.5%, and I'm earning 4 or 5%. I'm going to do that all day long. So of course, during certain parts of the business cycle, credit unions and banks shine. Some of that shine has gone away, as I said earlier, because the intermediate arm rates aren't quite as good as they were. But in order for banks and credit unions to survive, they need that spread. I'm not going to say, well, they should dominate, they should rule the world, because they never do quite rule the world. Independent mortgage banks and brokers still continue to thrive, because if you're a bank, you have a relatively limited product set. If you're a Wells Fargo branch LO, you're offering Wells Fargo lineup. If you are a quick and nimble independent mortgage bank or broker, you have the pick of the litter and you can move your products around and rates around. But I will say this, and loyal listeners and viewers have heard me say this before, but when you talk about the origination market, it's like a bike race. It's like a bike race, and we're all exposed to bike racing to some extent because we see the Tour de France on TV, and there's the Peloton, and there's a big group of lean and mean riders riding through the French countryside or the Belgian countryside. It looks really cool. And there's always 1 or 2 riders who will go out way out. They'll make a dash for it, knowing that it's a short-lived. No one ever stays out there. Either the Peloton catches up with them because aerodynamics and yada yada, or they get tired of being way out in front and they get exhausted and they fall back. The same thing happens with lending. There's always some lender or some investor who shoots ahead, but it's short-lived. There's nobody out there who you can tell me is number 1 in price, number 1 in product, number 1 in service, week in, week out, month in, month out.
Right.
They shoot out and then they come back. They shoot out, they come back. Different companies shoot out and they come back. So, and it isn't as if a certain investor or a certain lender has 100 or 80 or 90% market share. I mean, the biggest lenders out there, the biggest nationwide lender right now, which is Quicken/Rocket, I don't know what their market share is, 5 or 10%. That's still trillions of dollars of other market share that's out there. So yeah, you could say somebody's buying the market for some period of time, but they're going to come back to the rest of the group. And it's interesting to talk about what the companies hope to do, those fellows and gals, the gal riders who shoot out in a race. They hope to tire out the rest of the group so that they don't finish the race. And as I said earlier, we'll probably see some news today to that, along those lines. And, we wish the best for the companies and individuals that are impacted by companies or individuals that go out of business or that scale back. And, we motor on.
So, Rob, have you been biking recently? I mean, all these bike references. Are you a biker?
He was doing the Tour de France. Didn't you see him? He was in front for a brief moment.
No, I talked to him this morning. He was on a bike. He was on his way to go to a spin class. And then I presumably rode a bike back. I was half expecting him to show up today on a bike with his laptop, like, perched on the top of the handlebars. So,
Well, you only
anyway.
see me from here up.
Exactly.
And maybe, Audrey, if we start running out of topics, you can talk about your time in the spin class.
God, don't you dare. Don't you dare. I just wanted to say that NBA has come out and said that that mortgage credit availability dropped by 9% in July. So, lenders are tightening up guidelines. They were saying it was mostly Govy loans and jumbo guidelines, but also we know, as Kevin was saying, that non-QM has definitely been impacted too. And it's all about, can they sell that loan, right?
Yep.
Can they sell the loan? You would think, what's the number one thing that an investor's looking at with loans? You'd think it'd be ability to repay. Nope, it is, can I sell that sucker? So with that being said, and those ARMs, the other part of the ARM issue is that they are thinking we're going to be in a situation where we have lower rates in the next few months or year or whatever, and that people would refinance out of them, so they don't want to get too aggressive, et cetera, et cetera. So that kind of leads me into my next question for you, Rob, which is, you have not been on the we're in a recession, we're about to be in a recession bandwagon. Would you like to share with everyone why that is and where you are, what you're feeling today? Take your time. Take your time. No rush. No rush.
So describe my thoughts about the US economy in 30 seconds or less.
Right. Timer starts now.
I only know what I read in the newspapers. That was a Will Rogers line. So
how old are you?
You talked about one thing, employment. We are in a hot jobs market.
Yep.
Okay, hang on, Rob, hang on, because I wanted to say this last time. So I read that half of the newly created jobs were second and third, like they're not full-time jobs. So the hot jobs market, I think, is interesting when you start breaking down some of those numbers. So we went from 11.3 million jobs available and ready to be filled to 10.7 million jobs in like 3 months. That's a loss of 600,000 jobs. And so are we in a really strong jobs market?
Is that a loss of that many jobs or fulfillment of that many jobs?
Well, there's all those people leaving the job market, and it's a huge number every month, right? So how do we reconcile all that? And just for the record, I am not saying I have an answer or even a hypothesis. I'm just asking questions because it doesn't all fit together in, the things I'm reading and hearing.
So, Audrey, this is a clear example of bait and switch. When you were enticing me to come on this show, you said, Rob, I'm not going to hector you. I'm not going to badger you. I'm going to ask you softball questions about, Myrtle the cat. And now you're asking me to slice and dice the Bureau of Labor Statistics numbers, talk about labor force participation rates.
Yes.
You're talking about
household survey versus business survey. It's fascinating.
Sure.
Yeah.
There will always be something somewhere that somebody can say, well, what about this? And what about that? All I'm saying is that at certain, so I don't even know where to start. Yes, there's a lot of help wanted. There's a lot of jobs out there. Yes, there are people leaving the job market. There are people who are aging out, retiring. I think the average age of the loan officer these days is like 88. So at some point, those loan officers are going to retire. At some point, people are just they're aging out. But right. I will say this, certain parts of the economy are incredible. Audrey, if your plumbing backed up, how long would it take you to get a plumber to your mansion? Kevin,
I have no idea.
If Kevin, if you needed a handyman to, repair the fence on the South 40 of your acreage, how long would it take you to get that handyman out there?
It takes a week right now. Just went through that.
Yeah, it's a real problem.
Well, actually, really interesting because it's a good point, because I did have a handyman, and he completely started ghosting me. And I'm like, what happened to this guy? He used to come like bing, bang, boom, and no problem. And all of a sudden, like no replies. So I've since had to go find a new handyman. And he is like you're saying, it's like, I need this job. Well, I can get to, for this price, I can get to it this week. But for this price, it's 3 weeks.
It's like the appraisers. That was exactly the tactic the
Right.
appraisers took. You know what? Michael Simmons with Access Appraisal took on ghosting and appraisals. Why don't you call him, and get him on the handyman problem too?
Yeah, so I'm sure, Audrey, you're seeing this with your staff of manservants. The number of manservants that you employ probably dropped. And this is indicative of the labor market. If you look at, so getting back to Audrey, where you were challenging me, I'm all flustered now. So I'm just
But
saying.
you're thinking of manservants and it does something. Okay, gotcha. I locked mine up, by the way, so it's not an issue. Anyway, go ahead.
Can I speak now?
If you can complete a coherent thought, knock yourself out.
Oh, you're lucky I'm high right now. I probably wouldn't be laughing at that if I wasn't.
Oh my God, we had the funniest conversation, and that was part of it. A couple of weeks ago with Dr. Elliot Eisenberg, we were practically on the floor trying to keep it together. You really should tune in more often. It's really funny.
Yeah. Anyway.
Okay, now you're really flustered.
You can't
Back
sit
to
here and say-
manservants.
You can't sit here and say the job market is weak. You can't
No.
say there are bread lines. You can't say that. There are people who choose not to work. If you look at inflation, yes. Could we get into a stagflation environment? Certainly. The economy is just kind of bumping along, and inflation is a problem. And I think Mr. Tuttle mentioned that earlier on in the chat box about stagflation. I see that as an issue, but I continue to sense this economic buzz out there every time I go to a restaurant. If you go to a restaurant, for example, last week, we were in Michigan Mortgage Lenders had a conference, and I went out there to the Midwest early, spent some time in Chicago, went to Grand Rapids. You go to Grand Rapids, it was like a Wednesday night. It was packed. The restaurant was packed. Okay, on Grand Rapids on a Wednesday night.
So wait, just to be clear, Grand Rapids has more than one restaurant, right? So it's not like the entire population only has one choice. They have other choices.
You'd be surprised.
Okay.
You should go and check out the Gerald Ford Presidential Museum, which is in Grand Rapids.
Oh.
So
I heard they
it
have
had
a
a
fine
vibrant.
carousel there too.
What's that?
I heard they have a fine carousel there too, with lots of stallions you can ride.
That is true.
Oh my God. Okay, I'm so sorry. Let's get back to.
I think we need to give Audrey a break here.
Yeah, let's give Audrey a
Robin
break.
just turned 50 Shades of Red, so.
All I remember from Grand Rapids when we drove through was just the beautiful rapids that are going through that town.
Anyway,
Okay, so yes.
well, Audrey composes herself.
Restaurants are packed. That's true. It is
What
true.
I'm saying is that what I witness out there, if I go to a place for lunch, if I go to a place for dinner, if I drive down the road, if I go into Home Depot, if I go shopping at these stores, there is stuff. Now, granted, Audrey and Kevin, there's only, am I buying neckties every week? No. Am I buying new coats or suits or whatever? No. Am I buying am I buying much? No. Am I saying, if I'm on a fixed income, or if I'm not making much money, yes, I'm going to dedicate more of my income to necessities, energy, gasoline,
Right.
Canned goods, toilet paper, whatever it might be, things that I need to buy, not the things I want to buy. Am I going out and buying a fancy Rolex watch? No, I already have 8 of them. That aside, I'm just kidding.
Oh my God, we're not getting started on your watches, okay?
Yeah.
Um,
So what I'm saying is that people have a certain amount of income, certain amount of money. Yes, they may focus that money on different parts of the economy and more so on the necessities than the luxury items. But I'll tell you, you go to Disneyland, I hear, attendance at Disneyland, it's just people are out there traveling at summer vacation time.
Yeah.
Country clubs have retooled. They have more social memberships now than ever before because people saying, well, gee, do I want to spend $60,000 to join this club? No, but am I okay spending $250 a month on going to the pool with my kids and having meals at the club? Yeah. So different things are going on within the economy. But what I'm saying is that I don't see a recessionary economy. And people who try to simplify a recession by saying, oh, an inverted yield curve means a recession is looming. I don't believe necessarily in that. I don't believe that 2/4 of negative GDP is a recession. And I've written about that as well. It's much more complicated than that. And the unit of the government that looks at recessionary news and analyzes whether we're in a recession, they list off 8 or 10 things that they look at before they determine that an economy is in a recession. So it's not so easy. We live in you really got me going here, Audrey. Sorry. But it's not gee, I can tell if we're in a recession on my phone kind of environment. It's much more complicated than that.
yes.
So when you start to look at all the pieces, I will still say that I'm not in the recessionary camp. And there's a note about home prices dropping. So are home prices dropping at some price points in some markets? Yeah. In other price points in other markets, no, things are still flying off the shelf. You put a home on the market for less than $300,000 or $400,000 in many markets around the United States, it'll fly off the shelf. I happen to be selling a little piece of land in Reno, Nevada, put on the market. It's sold within days,
Wow.
like 2 days.
And what are
All
they going to do
cash.
with it? Are they going
All
to build
cash.
on it?
What's that?
Is it residential? Are they going to build on it?
I imagine they will. But if you look at am I going to spend $3 million on a 2-bedroom, 2-bath condo on Russian Hill in San Francisco or in Manhattan? No, I would say those price points are limited to their upside. Are they going to drop? Sure. Is the market for normal real estate becoming more normalized?
Right.
Yes, I would say I'm definitely seeing more for sale signs. When I talk to realtors around the nation, how's it going? Oh, you know what? It's nice to have a month or two of inventory.
Yep.
Or, the number of pictures that you see in the real estate agent's window, they're increasing because some properties are coming on the market. And are they getting 20 all cash bids, right? Within hours of listing?
Right.
No, but realtors don't necessarily like that. Do we want to see 20% appreciation every year? No, it's not healthy. If we go back to a market that only goes up a couple percent a year, I think that's fine. If you think about the real estate markets around the country that have gone up 20% in 2020 and 2020, or 20% in 2020, and then another 20% in 2021, we don't want to see that again.
No.
So if we see a little bit of a pullback from that, that's fine.
Yeah.
By the way,
It's time.
it's time for the special guest.
Well, we'll determine whether it's special or not. Let's see who you got. Dum ba da dum.
It is Robert Charles Chrisman III. Come sit over here.
Hey,
Robbie.
the man behind the newsletter.
That's right. The man who delivers those commentaries in a very even keel tone, always and I imagine, Robbie, your dad saying something similar, but still laughing on the inside.
So there we go. So let's get, Robbie's 30 years old. Do you think we're in a recession?
No, technically, yeah, but
Wow. I thought Robbie only read your commentary and no other information. And from that, one would glean that he would think that there is no recession, but he disagrees with you, Rob Chrisman. Robbie, share with the group.
2/4 of negative GDP signifies a recession. However, the National Bureau of Economic Research has the discretion to say it's not. And because of the employment situation, they're saying it's not. I tend to agree. I think the economy's strong. You go out, there's people doing stuff. People are spending money.
Mhm.
Doesn't feel like a recession.
No, I had I heard a commentator on, was on a news channel, and they said that the Fed doesn't need to have lower rates right now because the economy is so strong that it doesn't need the stimulus from the Fed. And in fact, that's what, instead of thinking, oh, they're raising rates so the economy, no, they're just easing their foot off the accelerator because it doesn't need that extra gas to be pushing right now. And it's just pushing along strong without the extra emphasis from the Fed.
People need to remember that the Fed rate hikes take 6 to 9 months to
Yeah.
fully
Exactly.
bake in. So
Exactly.
the likelihood, in my opinion, is that they overshoot their target and have to reduce rates next year.
Well,
So, Audrey?
the Fed members are all, they're in the, there is no recession camp. We're going to have a soft landing. Everything's fine. Everything's fine. Don't
So
worry.
Audrey, you were asking me about bike riding earlier. So Robbie just spent some time in Europe and saw the Tour de France and was mixing it up with the riders. Given what you've seen over there, does it seem like economic good times are continuing on, or do people seem somber?
I don't know. I mean, things are so much less expensive in Europe. You go out and there's a dollar-euro parity right now, but also a nice glass of wine is €6, so $6. And
That's not the Europe I was in last year. Where the heck were you?
Spain, France, Italy,
Yeah.
not in the touristy parts, in the countryside a little bit, but an entree at dinner is $9, $10, $12. I don't know how they have the economic force of the, or I guess the benefit they had of having the euro be stronger than the dollar. With that gone, it's a major detriment to them.
Interesting.
I'm
Yeah.
going to Europe with Robbie next time where I can go have an entree for €9. Holy smokes, that's crazy.
I was having 3, 4, 5 course meals for $30. It was great.
Yeah, that's,
Wow.
So
Amazing.
Audrey,
Yes, Rob.
actually, I'm going to ask a question because Audrey's tongue tied for the first time in her life.
Never, but go ahead.
Your cronies, your brethren, your high 20s, low 30s, do you think they're scaling back their spending? Are they out buying houses? What are they doing with their jobs and their money these days? I know that's a broad statement, but
Huge.
I think the last couple years they had major FOMO from not buying houses, and so they're kind of waiting to get back into it. People are going out, people are buying drinks, people are having a good time. I haven't heard any of my friends scaling back.
So the question is, are they still paying their credit cards off every month? Because the consumer debt levels are going to much higher levels than they were previously. So people are racking up credit card debt. And so are they spending and not paying it every month? How's it? I mean, thoughts on that? Must be, right?
You talk
So-
to your friends about their credit card debt?
Oh, this was at a
Audrey's a real firecracker at parties. So Audrey, when you talk about credit card debt, are you comparing it versus 2020 or 2021 when people were just sitting at home? Or are you comparing it versus like 2015, 2018, like over time?
Rob, I think we've really established that I don't make comparisons to a year ago. I typically will look back at pre-pandemic levels. Credit card debt is way up. That's really the messaging here. So
Well then how can you say the economy's in a recession if people are spending?
but if they're spending, but they still can't pay for it, is it really sustainable? You know what I mean? Like, and again, I don't claim to have the answers.
It's worked for 200 years with the US government.
That's true. That is really true.
Yeah.
So basically we'll be like Jerome Powell, who I think Jerome Powell and I need to go to therapy because I haven't forgiven him for telling the entire universe that they should just take a pause on buying houses in June. So I'm still a little bitter about the Fed messaging like that, but basically they're like, he was like, yeah, we don't really know what's going on either. So there you are a month ago. I'm not over it. Really not over it. I also thought this was very interesting. So a few weeks ago, Kevin and I were discussing Europe, back to Europe, and why their version of the Fed doesn't raise rates at the same way we do. And Kevin had this idea, which I believe probably has some validity to it,
Mhm.
that the reason that they don't do it as much is because they don't have fixed rate mortgages. So they know that when they bump up their interest rates, that the mortgage rates grow up, right? So we had
Yeah.
Dr. Elliot Eisenberg on there after that, and he confirmed that that was at least part of it. But then I read this little interesting ditty: Bank of England scraps mortgage affordability test, because apparently they had this, something that they put into effect after the meltdown. And they had this stress test that they introduced in 2014. And so there were limits on how much they could lend people based on their income, et cetera. And they have now decided to let that go because, why not, when you're trying to stimulate the economy and housing. I just thought it was fascinating. I'm like, okay, so you put all these safeguards in place, but as soon as it doesn't suit your purposes, you're going to scrap them. And then what happens to the economy then? Is that a safe bet for housing? Anyway, thoughts, anyone?
I'll throw in my thoughts because I think we have the two Robs, Robbie and Rob, stunned with your thought there. So to go with my comment there, when mortgage rates are directly tied to the Fed's rate, and when they raise their rates, if they had that here, if everyone had a HELOC instead of a 30-year fixed mortgage, we would have seen what's the rise in rates so far? Like almost 3% since they started.
I stopped counting after the last 1.5%.
Yeah, so you're going to see your HELOC go from 3% to 6%. That's going to double the payments, right off the bat. So suddenly that goes right into your pocketbook. And if it's on your first mortgage, like it is in Europe versus here, it's only on a HELOC, thank God. So what do most people have on a HELOC? Maybe $100,000, maybe 150 or something like that. So it's not hugely, maybe their payment goes from $700 to now $1,200. Now they'll start to tighten a little bit. But if your mortgage payment on a $500,000 loan went from $3,000 to $6,000, that's going to cut back. You're really going to be scrambling to, how do I make ends meet? So the Fed has to be in Europe and Australia and lots around the world. They have to be more careful when they're making their adjustments versus our Fed. They can hit the brakes a little harder because they have to.
And just a reminder that although the housing market is a little crazy right now, and home buying sentiment is not what it was for sure, the rents continue to go up, and buying a house happens whatever is going on in the market for certain people, because you have to have a place to live. And this idea, is it a good time to buy? We really need to, in my opinion, get back to, do you need to buy? Do you need a house? Does your family need more space? Do you need to downsize? What do you need to do in your life? You don't make or lose money until you've bought or sold your property. So this whole idea that people are like, oh, I made this much. No, you didn't. You didn't sell. You didn't make anything. You have made zero. Okay. So potentially you could, but maybe not. Right. So again, for us, the time to buy is when no one else wants to buy. And that is right now. So if you don't have a ton of competition, and that is very different from one part of the country to the next. But if you need to buy a house for your family, you buy a house for your family. If you need to sell a house, and by the way, if you're selling a house after this massive appreciation in the last few years, whether or not we are slightly below where the price was 3 months ago is irrelevant. You've still made a ton of money. If you're selling, you're going to make, your gains are going to be much bigger than you ever dreamt would be possible. So I just find some of these numbers really interesting, as far as, 37% think it's a good time to buy now. Okay. And you know what I mean? I don't know. Thoughts, Chrisman's?
My friends that are on the sidelines and want to get in, I say, why would you triple your monthly housing expense? You know, you can invest in other things and get a rate of return on that. You don't need to hamstring yourself by making exorbitant housing payments every month.
So when rents are going up somewhere between 14 and 20%, then what do they say?
Most of my friends seem to be rent controlled. I haven't heard anybody really complaining about their landlord raising rent. I think it's when you go to a new place or
There is a difference, that's true, between what a new rental.
Even then though, I've done the math because I live in a rent control area, and I've done the math, and because I had someone say, oh, I'm only paying $1,500 a month in rent. Why would I ever want to buy? And I did the math on it, and I said, well, you're missing the fact that if you bought a home, it would appreciate. And when, after 10 years, your home would be worth this much, and your rent will still be a little over $1,500 a month. Yes, but look what you lost out on was all that appreciation. And when I did the math, it's like your landlord would have to be paying you $1,500 a month in order for you to even come close to the losing that appreciation you're losing on buying a house.
That's the answer for your friends, Robbie, really is, okay, you saved a few bucks a month by renting, but you lost hundreds of thousands of dollars by renting because you didn't have appreciation.
Sure. However, they could have invested in the stock market and got a return. They can't leverage themselves up like they could with a house where you put down $20,000 on a $100,000 property and get the gains on $100,000. But there's other investment vehicles out there.
Hopefully not a negative return like people are seeing in their stock market portfolio.
Yeah,
Well-
and the Coinbase accounts, which, if you were with Voyager, your money was frozen and maybe next week you're going to get it out, but otherwise you just lost all of it. So with that, guys, okay, so just quickly, who do we have coming up? Next week, we'll have Josh Pitts. The week after that, Erin D with Lone People. She's the COO. Mark McWardle with the CFPB will be joining us on August 30th. We have Dave Stevens, then Barry Habib, and then some appraisal gurus. So we've got quite the lineup, and we will look forward to seeing everyone. And thank you so much to Rob and Robbie. And just for those who tuned in late and didn't catch it, the guy in the bottom is not also Rob Chrisman. It's Kevin Casey. So thank you guys. Have a really, really wonderful week. Stay focused, lock your loans. Do not mess around with the inflation numbers coming out. So with that, have a great week, guys.
Thank you, guys.
Thanks for having us.
Thank you,
Bye.
Robbie. Thank you, Rob.
Bet.